What's going on, guys? My name is Emmanuel and welcome back to my channel. For all the new subscribers that we gained, I want to say thank you. I love you guys. I see y'all and I appreciate you guys. So today's video is going to be based on what I learned from reading The One Up on Wall Street by Peter Lynch. Incredible book, guys. If you haven't read it, I would highly recommend it, and I will leave the link to the book in the description below. So one of the key takeaways I took from the book was Peter Lynch emphasizes that the best investment you can make is right around you. All you've got to do is pay attention to your surroundings, be aware of what's going on, what's new, what's developing, and pay attention to it. One of Peter Lynch's best investment, according to his book, was his investment in Dunkin Donuts. Now, Dunkin Donuts is pretty much like the Greggs of the UK, all right? So he was aware that Dunkin Donuts were growing, they were expanding, and he invested in the company, and that was one of his best investments. So I took what he said on board and I started paying attention to my surroundings. So I was at Marks and Spencer's the other day, and as I was approaching the cashier, I started to see signs which said no cash only card. I took a picture of the sign and I'll post it up now. So in the UK, the two most popular card payment processors are Visa and MasterCard. I'm sure if you look at your card, you've either got a Visa or you've got a MasterCard. So with that said, I wanted to dig deeper and analyze Visa as a company and as a potential investment. So I'm going to hop onto my computer now and show you my analysis.
Guys, so one of the first things I look for when analyzing a company is I try to understand what the story of the company is. That's a great tip I picked up from Peter Lynch's One Up on Wall Street. You need to be able to understand what the company do and how they make their money or how they generate their revenue. So here Visa, where it's pretty much is an electronic payments technology company, operational in over 200 countries, and it enables transactions between financial institutions, consumers, merchants, and banks. Okay, so it generates most of its revenue by acting as a middleman, and it's pretty much so it acts as a middleman between financial institutions and merchants. Financial institution guys, they're pretty much commercial banks, hedge funds, brokerage firms, and insurance companies. Okay, guys. So as I mentioned in the intro, one of the most interesting fundamentals to me was when I was at the store and they said they're no longer accepting cash. Okay, so that's a huge fundamental, and is also as a result of the whole virus that's going on. People are scared of cash now. So one other interesting factor that I looked at when I started digging deeper was Visa was actually part of the US and China trade deal that was agreed in January this year. So bring it up here. Again, I'll link this information in this document in the video, but as you can see here, between China and the US, China has accepted, said it was China shall accept application from US electronic payment services and suppliers, which is interesting. And if you go here in article 4.4 in verse 2, says pretty much China shall accept the license applications of such US suppliers, which includes any license application from or of MasterCard, Visa, and American Express. Now, if you think about the population in China, and if they all start using Visa, MasterCard, or American Express to process their payments, that is huge, guys. That is huge. So that's a huge fundamental. And also with Visa, doing some more digging, they've recently applied for patents to tap into the whole world of digital dollar blockchain application. So that's to do with cryptocurrency. So that was an article that was published by Forbes on the 14th of May 2020. So it's also a good read, which I will link in the description below, guys. So I really do like Visa with their expansion into digital currency. It's it's a sign that the company is innovating and they're not scared to take risks. My next step in my analysis is to look at the company's main competitors, who they are, and also to look at the company's moats. Okay, so according to the Business Insider, again I'll link the article here, it pretty much is quite bold in saying, you know, Visa remains the king of the mountain in the card network industry. All right. And the supporting article to Business Insider was an article by Reuters. And they even gave a figure. So they said that Visa holds 60% share of the credit and debit card market, which is closely followed by MasterCard, which has 30% share, and American Express, which is far behind at 8.5%. So they've all pretty much said Visa's number one, you know, and in regards to the Visa's moats, Warren Buffett says, you know, a moat pretty much refers to the ability of the company to remain competitive, okay, and it just puts it in a huge advantage over the competition. And if it has a good moat, it pretty much means it can protect its long-term profits because it's the king of the hill, essentially. All right, guys. So always look at the competitors. The fundamentals, they pretty much have me convinced on Visa. So now we're going to take a deeper dive at the competitors. I want to know who has the best balance sheet, who has the best income statement, and who has the best cash flow. Okay, so at this stage, I'm going to give a shout out to another YouTuber called Daniel Prunk. He's actually become quite a good friend now. He pretty much gave me the idea in his YouTube videos to put all the figures side by side. That will help pretty much with comparison. And I will link his YouTube channel again in the description below, so please check him out. All right. Okay, guys. So I have listed each company's share price, and this is their share price as of May 16th, 2020. And this is the income statement. Okay, so TTM, just for clarity, stands for trailing 12 months. And all of these figures here are in thousands. So what that pretty much means is you have a revenue here that looks, well, it says it's 23 million, but essentially you've got to times that by 1,000, and the actual figure will be 23 billion. So look at that. So keep that in mind when we're going through these figures. So, but that multiplication by 1,000 doesn't apply to the earnings per share and the revenue growth. So if you see decimal points or percentages, they're not times 1,000. All right. Okay. So now got out of the way. So essentially, we're looking at the company's revenue. Okay. So the revenue is the total amount of money that the business generated before expenses. Okay. So before the cost of revenue has been deducted, before the taxes, and before the operating expenses. All right. And looking at here, interestingly enough, American Express actually generated the most cash out of all of these four heavyweights. So the next step now is the net income, okay, and that's pretty much the amount of money left after you've deducted the cost of revenue, operations, and the taxes. And interestingly enough, even though American Express generated more, as a result of what they had to pay for the cost of revenue, the operations, and taxes, they're left with a lot less. Okay, Visa made 12 billion, Mastercard made 7 billion, and PayPal was left with 1 billion in terms of net income. And this is quite concerning. It's a bit of a red flag because again, if you now look at the operating margins, you know, operating margins, Visa has 66%, Mastercard has an operating margin of 56%, 0.88, and American Express has only a operating margin of 18%. Okay, and the operating margin represents the percentage amount of the company's revenue which is kept as earnings. Okay, so I got this idea or this example from Daniel Prunk. He says if you think of the operating margin as this, so for every £100 that the company makes in revenue, whatever the operating margin is the amount that is kept as earnings. Okay, so if you think of this, so let's say Visa, for example, for every £100 that the company made, it kept £66 as earnings. Okay, so here with American Express, an example, if it made £100, it only kept £18 as profit, as net income. So that's quite low. So generally, I kind of look for companies that have a higher operating margin of at least 20% because if a company shows good control, if the management show good control of the operating margins, it can really boost your bottom line, your net income. Next step is to look at the EPS, which is the earnings per share. And pretty much the earnings per share is calculated as the company's net income divided by the shares outstanding. Okay, so to find out, if you want to do the calculations yourselves, you go on Yahoo Finance, enter the company. So I've already done it here, and you go to statistics. And if you scroll down, it tells you the amount of shares outstanding. So that's 1.69 billion. All right. So the EPS for Visa is 5.56, 7.82 for MasterCard, 6.63 for American Express, and 1.58 for PayPal. Now, I'm going to quote Peter Lynch here, and he says, if you can follow one bit of data, follow the earnings. Assuming the company in question has earnings, what the stock does today, tomorrow, or next week is only a distraction. All you have to do pretty much is just follow the earnings, okay? So I don't really care what the market price does today. If I invest in a company now, let's say for example I invest in Visa and the price go down, I'm not really bothered as long as the earnings are still increasing. So if the price goes down and the earnings are going up, then if anything, that's more of a reason to buy more. My analysis is to look at the PE ratio, and Visa has a PE ratio of 33, MasterCard 35, AXP, American Express is 12, and PayPal is 92. So the PE ratio, guys, Peter Lynch does a great job explaining that the PE ratio is the relationship between the stock price and the company's earnings. So if you look at the PE ratio number, that pretty much gives you an idea of how long it will take before you get initial return on your investment. So for example, if I have a share and it costs $10 a share, and the earnings per share was $2, that 10 divided by 2 equals 5. So that will mean it will take me 5 years before I get a return on my investment. Okay, so even if we do the maths here, if we look at the current PE is 33.03 for Visa. If we times it by 5.56, which is the earning per share, that will give me an indication of roughly what the share price is. So in this instance, according to the PE ratio, it will take me 33 years to get a return on my investment with Visa. It will take me 35 years for MasterCard. American Express, it will take me 12 years. And PayPal, which is crazy, it will take me 92 years at its current earnings per share for me to get a return on my investment. So a lot of investors pretty much look to the PE ratio to determine if they think a company is overvalued. Alright guys, so moving on to the quarterly revenue growth, and YOY pretty much means year on year. Okay, so I always like to keep an eye on the company's quarterly revenue growth as it grown. And if you're taking a look here, you see it's grown by 6.6% with Visa. MasterCard, it's grown at 3%. American Express is taking a nosedive. It's down 19% year on year. And PayPal is up 11.9% revenue growth year on year. Now, year on year, we're in May now, so it's taken into account the first quarter of 2020. And with the current virus going on, it's definitely affecting American Express the most. And if you look at the earnings year on year growth, despite the virus, Visa is up 3.6%. MasterCard is taking a hit, it's minus 9%. American Express is minus 76, guys. That's a huge impact. And PayPal, it's down minus 87% on year earnings for the quarter. Visa's up 3.6% is a huge plus. So the next step in our analysis of the financials is to look at the balance sheet. And we're going to start with the total current assets versus the total current liabilities. And the total current assets, guys, are these assets that can be liquidated or turned into cash within the next 12 months. And the current liabilities, these are the financial obligations of the company that are owed within the next 12 months. So for example, if you're looking at short-term loans or taxes that are due within the next 12 months. So here you've got Visa's 20 billion in total current assets to their 13 billion in liabilities. MasterCard have a 16 billion current assets, and current liabilities sits at 11 billion. Yeah, so American Express, their current liabilities and current assets weren't stated on their 10K. PayPal, and it sits at 38 billion, and the current liability sits at 26 billion. Okay, so these are key indicators to know the financial condition of the company. All right, so especially in economic lockdowns or downturns as we're pretty much in, because if the company's current liability exceeds the current assets, you know, it's not a good look for the company, and it's an indication that the company cannot fulfill their obligations quickly, and you know they are probably at risk of going bankrupt if they can't fulfill their obligations. So these are key factors and key figures that you need to know before investing in a company. So I'm going to show you a prime example of this. If we look at Carnival Corporation, so they're pretty much a cruise line business, and if you've been aware, they've been struggling really, really bad by this whole virus. If you look at their current assets, so the company's current assets sitting at 2 billion, versus their current liabilities, which is 9 billion, guys. So there you go. You know, if they need to liquidate and turn their assets into cash within the next 12 months to fulfill their financial obligations, they're not gonna be able to, because they don't have enough current assets. So with that said, companies like that will probably go to the government for a bailout. All right, guys. So keep an eye on the current assets and the current liabilities. Okay, these are key indicators. So now we're going to move on to total cash, and Peter Lynch likes to compare the total cash versus the total long-term debt of the company. So if they have more cash than debt, it's a huge indicator of financial prosperity. And Visa is sitting at 12 billion cash, but 16 billion in long-term debt. It's not too bad. MasterCard's doing even better, sitting at 7 billion in total cash versus 8 billion in long-term debt. American Express sitting at 23 billion to 57 billion, and PayPal is doing the best. You know, it's 10 billion in total cash, and their long-term debt is 4 billion. That's an incredible position for PayPal to be in. And then this, moving on to total assets again overall. So these are long-term assets. Visa sitting at 72 billion to 37 billion. MasterCard's 29 to 23 billion. American Express is 198 billion versus 175. And PayPal is sitting at 51 billion versus the 34 billion. Okay, guys, so now we're moving on to the total, the stockholder equity. All right, and I like to look at the company's stockholder equity, because if this figure has gone up year on year, it's an indication that the assets have increased more than the liability. So the assets have grown faster. So when I've already done my research, so again, guys, you can go on Yahoo Finance to find this out. Let's bring up MasterCard. If you look at the balance sheet, guys, forgive me, you can see year on year it's been a bit stagnant with MasterCard, and I've mentioned that on here during my analysis. So it's been a bit stagnant. It's not gone up and it's not really gone down. For Visa, it has. For American Express, it's only gone up in the last 2 years, and PayPal, it has. Okay, so guys, the current ratio pretty much subtracts the current assets from the current liabilities, and I like to look for figures that are higher than 1. So pretty much all of these companies have a current ratio that is higher than 1, and the book value per share is the total assets minus the total liabilities divided by the shares outstanding. And to find out the amount of shares outstanding, guys, you go onto Yahoo Finance, click on statistics, and the shares outstanding is here. The final step of my financial analysis is to look at the cash flow, and I've picked out some important figures that I look at. And the first step is to look at the net cash flow from operations. I want to make sure that the numbers are positive and not a negative, Because if it's a negative number, that means it's an indication that the business is losing money from its operations. So all four companies are making money from their operations. Visa sitting at 12 billion, MasterCard sitting at 8 billion, American Express 2 billion, and PayPal sitting at 5 billion. And one thing I look for, I just want to make sure that this figure has been increasing year on year. And for Visa, it has. Um, MasterCard, it has, but it dropped this first quarter of 2020. American Express, it hasn't, and PayPal, it hasn't. Okay, so the next step actually is looking at investments in property and plants, and this is pretty much how much the company has spent uh, back into the business. So Visa spent 850 million, Mastercard's spent 795, American Express is 1.6 billion, and PayPal sitting at 692 million. Now, the acquisitions and the nets, so that pretty much is how much the company has invested in other companies. Okay, guys. So that with the acquisitions net, it pretty much means the company holds a huge controlling stake in another company separate from its current business. So Visa has invested 776 million. MasterCard has invested 2 billion in another company. American Express has invested 332 million in another company. In PayPal, there's no figures provided. So I pay attention to the acquisitions net, because if the company is spending a lot more money than its investments in property and plant for its own company and for purchases of investments for its own company, that's a huge red flag. And for me, I would like to find out what company they've invested more money in, and probably look at that company and see if I can invest in that company, because it might actually be cheaper. So always look out for that, guys. And looking at MasterCard here, you can see they've spent 2 billion investing in another company, and they've only spent 795 million in their own. And the purchase of investments for their company has only been 748 million. So I would you would have to go to the MasterCard's annual report to find out exactly where that 2 billion has gone. All right, guys. So moving on to common stocks repurchased. So again, stocks repurchased is when a company uses its cash to buy back its own shares. Now, this is good for investors, because when companies buy back their own shares, it boosts the share value up. So as a shareholder, your equity's gone up. But it's share buybacks has had a lot of negative press recently, because if a company is spending all its cash buying back shares and they haven't got enough money in the reserves, especially to cover itself in the midst of a crisis or a pandemic, then a lot of people are saying, well, why did they buy back shares? They should have been more responsible. So it's got a bit of a negative press at the moment. But yeah, they've all been busy buying back shares. The least busiest has been PayPal. All right. And lastly, guys, I look at the free cash flow. And what I look for in the free cash flow is pretty much to see an increase year on year. And Visa, MasterCard, American Express have all showed an increase in their free cash flow amount. PayPal has seen a decrease. Now, Peter Lynch talks about the institutional ownership percentage, and Visa has, so 98% of the ownership of Visa is institutional firms. And to have a look at the institutions, you just go on to Yahoo Finance. You have a quick look at Visa Inc. Go to their holders, and on here it shows you the main top institutional holders for Visa. If we go back, you can see 98% is Visa, 78% is MasterCard, 87% of American Express is institutional ownership, and PayPal is 86%. All right, guys, and Peter Lynch always talks about looking for insider purchases, and they have been taking place. And again, you just go back to Yahoo Finance. Once you click on holders, you click on insider transactions, and it shows you the last insider transaction.
All right, guys, thanks for watching. I hope you enjoyed the analysis. I personally think, from a fundamental standpoint, I think Visa makes the best investment in my opinion. But putting the financial side by side, I am really interested in loading up on a bit of American Express, and I do like MasterCard. But with MasterCard, I will probably keep an eye on the market price. I think it's slightly overvalued in comparison to the price of Visa. So guys, if you enjoyed the video, I'd appreciate if you give it a thumbs up. Please subscribe and also click the notification bell below so you're notified when I upload my next video, which should be in a couple of days time, guys. So I appreciate you. Thank you so much, guys. Take care.